Welcome to Brokers Digest, a weekly webcast by The Edge Singapore, where we discover stock opportunities with you. This episode is made possible by TD Ameritrade Singapore.
Hello and welcome to another episode of The Edge Singapore's Brokers Digest with me, Amala Balakrishna. Joining me today is Leonard Ng, Manager for the Trade Desk of TD Ameritrade Singapore. Hi Leonard, it's good to have you with us today.
Hi Amala, thanks for having me.
Okay, Leonard. So since we last spoke, there's been so much buzz over how soon we will have a COVID-19 vaccine. And this follows the announcement of Moderna's vaccine having an efficacy level of around 94.5%, while that for Pfizer and BioNTech reportedly have an efficacy of over 94%. So markets responded positively immediately after this announcement. But really, what do you think this buzz is all about? And how does it affect the stock market, Leonard?
I see that overall, it looks like a short-term hype, so with quick bounces. So as you can see, whenever there is a positive news that is being released, there is always a quick bounce or a bump in the market. So, but when you want to invest, I would recommend keep the long-term view in mind. So not just the current, whenever there's a release of the vaccine, there's always that quick hype. So do take into consideration. So here's why that I got from Neil Halsey, a professor of pediatric infectious disease and international health at Johns Hopkins Bloomberg School of Public Health. So he argues that vaccines are usually produced at a relatively low price and are sold with a low profit margin. So what it means is that they are seen as add-ons to the current products that the pharmaceutical companies are currently owning, so in their product stable. So the vaccine production itself is tricky and less lucrative as live vaccines are difficult to manufacture. And the route to release is actually fraught with expensive and tedious obstacles. So the trial testing, phase 1, 2, 3, all involve eventually humans, which is a very sensitive and very expensive issue if something were to be adversely occurring. And furthermore, vaccines are heavily closely regulated by the FDA for quality controls. And then that is just the supply side. So to add on, there is the demand side where public agencies globally, so be it Singapore, be it Malaysia, be it anywhere in the world, they often buy vaccines at capped prices. So capped prices are compressing a lot of profits as there is a limit to the selling price that the pharmaceutical companies can sell. So in summary, with a combination of high production costs, low market prices, and heavy regulations, this may have contributed to occasional vaccine shortages. And in this light of emergency, where this pandemic needs quick responses, it is very hard to just hasten the process. Imagine baking a cake and you just try to hasten the baking process is equivalent.
You're spot on in saying that any market reaction is but temporary, because we just saw this last week when markets reversed course on Friday following news of the Treasury Department's move to end funding for several lending programs by the Federal Reserve. Now, the 30-stock Dow Jones Index was down 0.3% for the week ended Friday, November 20th, while the S&P 500 lost 0.77%, only to break its two-week winning streak. And similarly, the tech-heavy Nasdaq inched down by 0.42%, making this its fourth week-on-week decline. So, Leonard, why do you reckon the markets have been so sensitive to the news and the redirection of funds?
One of the key programs that you can notice is that the Federal Reserve itself, they come up with this kind of cash aid program. So one program, it is the Municipal Liquidity Facility that serves as an insurance to ensure sufficient liquidity there is in the market for absorption of any adverse reaction from the COVID. So be it needing cash flow from small business owners, from individuals hit by COVID. So that is where these liquidity facilities come into play. So even though the take-up is quite little, not a lot at all, it is akin to the life vest that is under your seat when you're flying. It is good to know that the life vest is there, but we seldom use it at all. So the same thing is for the take-up of these liquidity programs. But imagine if the removal of the life vest or these liquidity programs, it will create a tension of unknown in the market. So that is what we are seeing now. So how would you feel if the life vest was to be removed, citing evidence of little use in its history of service? It is happening to the markets when the Treasury cuts the AIDS program. So this tension that is seen in the markets will persist for a while until there is known stability where the aid program is here to stay or the COVID situation has improved.
Right, Leonard. So, another form of tension that we saw last week was a spike in COVID cases in America, particularly. And this has led to speculation of tighter movement restrictions being imposed to curb the spread of the infection. And against this backdrop, market watchers expect entertainment counters like Netflix, Discovery, and Viacom CBS to perform well, especially since the average American is said to spend around 12 hours a day on their laptops or phones, either to communicate with others or stream content. So, what say you, Leonard? Have you been watching more content on Netflix in the past few months?
Well, yep. With nowhere to go during the weekends, I have cleaned up 2 seasons of Narcos on Netflix.
Well, so like you, I'm sure many others have been tuning in to the programs there. So, do you think that these are entertaining counters to keep a watch on in the weeks ahead?
So I would rather say it is a mixed impact. On one hand, Nielsen research found that staying put in our homes can lead to almost a 60% increase in the watching of the streaming content. So in that sense, where the COVID numbers has rise due to the third wave, many Americans are stuck at home, and then they turn to streaming content to fill their time. So at the same time, if we want to look, we see a longer term peering after the COVID crisis. So Netflix said that it expected viewing to decline and at the same time membership growth to slow as the world opens up again. So accordingly, the company is only forecasting 2.5 million new subscribers in the next quarter.
So movies have also been a good source of entertainment during the lockdowns. And while movie theaters have been kept open in the US, unlike in other countries like in Singapore, the industry has been affected by delays in movie release dates. So there's talk that players like the industry favorite Walt Disney will indirectly benefit from possible stimulus that Biden will inject into Hollywood. So what are your thoughts, Leonard?
So if you take a closer look at Biden's transitional team, there is an executive from the Directors Guild of America, DGA. So he will be leading the US-China Film Agreement. This was set up in 2012 and was paused by Trump's presidency. So with that, the agreement will plan to open up more of the film distributions of Hollywood's products into the Chinese market. So that at the same time, the industry watchers also suggest that the Biden's stimulus bill could provide broad financial relief to the pandemic hit states to help these states actually to maintain their US film and TV tax incentives throughout this pandemic period.
Right. Speaking of Biden, market watchers say he may adopt a harder line on restrictions and close recreational areas like casinos if the pandemic worsens and sustain these companies with stimulus. So others believe that the sector stands to gain from a speedy reopening, which may come soon after the COVID-19 vaccine is launched. So Leonard, do you foresee the likes of Las Vegas Sands Corp performing well going forward?
In the near term, it is still unknown, and in terms of the gaming scene and the entertainment scene, so it depends now, because a lot of these entertainment industries have moved on to digital. So in terms of online gaming, that is the boom now. So in-person ones will depend on their actual innovation in terms of their products and services that they can give to consumers in post-COVID period.
Right. So, based on your comments, Leonard, it seems that the recovery for the entertainment sector is rather dependent on how quickly the COVID 19 infections can be curbed. And just like for casinos, the vaccine may bring the option for travel via air and cruises. So, previously, you shared that TD Ameritrade's clients have been net sellers of airline counters like Delta, based on your investor movement index for October. So, do you reckon that this is a safe strategy to continue going forward?
So for this, it also depends on the outcome of the vaccines. So I think in the next quarter itself, or the next 2 quarters itself, is about vaccine sensitivity. So whether the stocks itself and companies are performing well, if the vaccines are successful, because the numbers will always still be there, and it depends on the safety measures of each state and country that will be used to help with the alleviating the numbers. But what the businesses can do will be more of looking beyond it and then seeing the incentives that they are having now. And then if you are looking at your own portfolio, so that one you have to see beyond COVID. So not just in the current state, look at the macro trend of how things are moving.
Right, Leonard. So, speaking of looking into the world beyond COVID, I would like to ask on how the communication sector, which has been rather resilient this year, will possibly perform in the next year or so. So, Zoom and WebEx have become our companions this year. And do you think that they will still be our companions going forward once the COVID 19 cases go down and movement restrictions are eased?
So as we see during the pandemic period, they the telecommunications or the teleconference platforms itself did bridge the physical divide for both casual and business users. So they also fill the gap of non-physical interactions. So as humans, we need to communicate. So communicate is not just words itself, it's seeing the expression, seeing the facial changes, the nuances, so that we can convey the actual message behind the words to the other party. So these platforms itself did prove their worth during this time. And then looking beyond COVID itself, we are looking at globalization. So how connected a country or a company is, leveraging on their global capabilities. So these platforms will be used to serve connecting these resources together. So on the other hand, I have to say that teleconference capabilities are usually the side dish of the core products that these IT giants are selling. So, and the other thing to take note of is teleconference capabilities are easily replicated. So look at, and then there is always a free version out there. So if you don't like using Microsoft Teams, we have Google Hangout. If you don't like Google Hangout, there's Zoom. So there's always a multitude of products out there of the same nature. So bear in mind this point when you want to look out for your own portfolio.
Right, Leonard. So, there's so much of uncertainty going forward as to how things will pan out, especially in terms of whether the number of COVID cases goes down, whether the vaccine will be ready, and when it will actually be ready. So, what tips do you have for our viewers as they trade in the next few weeks?
So I will want to throw out one more key term, so which is the temperature sensitivity to vaccines. So that is the next game. So not just looking at the efficacy, not just looking at the competing, is like different race horses trying to race for the final finishing line. With that, stocks that are sensitive to vaccine success are also in play. So with the need for ultra low temperature storage, it is going to test the pharma companies to come up with more shelf stable products or the logistical solution that can accommodate the wallets of the agent, that means the global buyers of these vaccines, as well as the tough environments that they are operating in. So usually, if you look at the developing countries themselves, They are in very harsh environment, whether be it the logistical issues in trying to in their infrastructure in terms of accommodating such vaccines at very low temperatures. So that is where we shall see in the following few weeks.
Well, Leonard, actually, temperature sensitivity is not something that I thought would be so important point for us to think of. So thank you for sharing that. So you mentioned so many great tips today. So thank you for that insightful session. And we have come to the end of this week's Brokers Digest. And thank you for your tips and insights, especially on the entertainment sector that we will be watching in the next few weeks. So to our viewers, we hope these strategies help you in your investment decisions in the short and medium term. For more analysis in the stock market, you can visit TD Ameritrade's Education Center or the Edge Singapore website. You can also sign up for our year-end forum happening on the 5th of December for more in-depth analysis on how the US market will take shape in the medium and longer term. Do like us on Facebook and Instagram to be alerted on next week's episode, which will also be the last in this series. So we will be having an insightful session jam-packed with more trade secrets that you won't want to miss. You can also leave us a comment below if there are any questions or topics you would like for us to discuss. So I'm Amala Balakrishna, and with me is Leonard Ng, and we will see you again next week. Take care. Goodbye.